Good morning, everyone, and welcome to our Tuesday morning trading room. Just a second here, we'll get the screen share going on. All right, so yesterday after we left the market, it did decline a little bit more, but ended up spending pretty much the whole rest of the session in a bit of a sideways drift. That is not unusual. It's actually fairly common to see a market make a strong move to start and then kind of fall flat for the rest of the day. Just a little something to keep in mind when you see those kinds of things going on. So we're opening, or we have opened near yesterday's lows. And you can see took a nice little bounce here off of the primary support zone to start. So right now things may be with a slightly more bearish flavor, but again, we're only a minute into the session. It's a little bit early to call. The overnight was a little bit more bearish, if you want to call it that. I do believe today is still a bank holiday in Europe, May 1st. So that could slow things down a little bit. Other than that, it looks like we have an FOMC statement tomorrow, May the 2nd. So that could actually throw a little water on today's trading as well. Okay, right now they're fairly condensed just to bounce around a little bit. For those of you who like that first in sync eagle signal of the day, well, there it is right there. It just printed a moment ago. So the eagle suggesting the market may be inclined to move lower to start. And if you would like to do that type of signal on the Raptor as well, you would just be looking for your first in sync signal. And I'm not sure we have it just yet. The trading band is a little bit of a mess here right now. Very congested, very sideways. After the strong decline we saw out of yesterday's open, if I had to pick a direction, if you force me to choose higher or lower, I might be leaning toward the sell side just a little bit. But like I said, we're trading very close to yesterday's lows, so we may just end up going in the sideways trading range. All right, the Hawk and the Falcon both getting a little bit more bullish here now. What time is it? Oh, we're only 5 minutes in. I don't know if I want to try anything just yet. lot of thrashing back and forth. Here come the sellers again, testing the bottom end of the trading range. So the Hawk producing a sell signal, the Falcon also. Here the Raptor also producing now a cloud crossover as we get back down toward the opening low. So there's obvious sensitivity off of the low here of the morning as prices came down twice now, hit that level, made a rather significant bounce higher. So now we got the cloud crossover to the upside. This might actually be worth trying, you know that? Because the market is not wanting to head lower. Can I cover it below there? Oh, I can. The market's not wanting to head lower, so there's a very good chance it's going to want to try to head higher. So, you know, you can see how the market came down, tagged the lows, made the quick rally up. No, maybe I spoke too soon. Maybe they're not ready yet. All right, I think it's best to give them a few more minutes. They're a little bipolar here at the moment. Look at that. Here they come back down toward the lows. Well, if this isn't a sideways trading range, I don't know what is. There we go. Okay, now we get the breakout lower. By the way, this also should have found your target for your first in-sync eagle signal if you had the patience to ride out these swings, which I'm not so sure I would have. All right, a possible late filter entry in the making here on the Falcon. Oh, if it doesn't go too much higher. We don't want that trend line to change color. And here they come back with a possible signal. You can just set up to short below that current low. And that can be your just in case order. Just in case the bottom falls out of the market. This little move lower is going to have more than a few traders scrambling for their sell button. So we're getting back-to-back late filter entries. When they develop this closely, I consider it one and the same. I don't really consider it to be two separate ones. All right, did they slip me? No, they did not. And now the big test to see whether this stop is going to be far enough away, because the best stop placement is actually right up here. Taking a bit of a chance with the tight stop. Oh, getting a little bit of a trend change going on. Or attempted trend change going on. Oh, not liking this back and forth stuff. I'm going to try to give them some room here, but if they don't behave soon, I'm going to be forced to bring my stops in just above the primary support zone. Okay, here they come again. They're going to give it a go. Maybe. The market very, very balanced around this whole 65.80, 65.90 price zone. Come on. Just get below this low right here. Where's the culprit? 65.78 3/4. Once we're below there, there's actually some room to move, and you can take profit on target, or if you wanted, you could try to sneak the market down here toward the next support level, which is 65.61. No love from the sellers right now. The buyers holding strong at around that 65.80 zone. I'll give them a minute or two yet, see if the sellers can't push the market below that 65.79 zone. Come on, you can do it. What I'll do is I'll bring in my break even a little bit back to where it was. And doggone it, come on, you guys and girls. Get down there. They just keep kissing that price zone. We've got ourselves a really, really tight little sideways channel here. All right, I'm going to take a few ticks off of the trade here. Roll my stops in above the primary support zone. And I'll get a little ambitious here, get ready for a parabolic when and if we get the breakdown below the lows. Right now, it's not looking all that promising, though, I have to say. No, they're going to stop me out here. Doggone it. So if they tag me out, there's a good chance the market's going to try to reverse and head higher from here. I don't normally do reversal type trades, but I might consider one in this case. All right, so they're not looking like they want to head any lower. So let's take a look now at a buying opportunity. And here on the Hawk, we're going to get an early cloud crossover. We've already got the trend change signal here in the Falcon. This is the one that tagged me out. So you could use this reaction here now for your second push entry opportunity. And then here on the Raptor, now we have the early cloud crossover developing. It's going to do kind of the same thing. Now, the early cloud crossover occurs when the clouds are almost fully crossed, almost but not quite. We get a little bit of a pullback, and then we get the market trying to resume the new trend. The danger with this trade right now is that we've broken outside of this trading range. Is this move just a move into the trading range and is it going to bounce out, or is it actually going to recover all the way into the trading range? Obviously, I'm hoping it's going to recover all the way into the range, and I will actually give my targets a little bit more room. Okay, well, not on that one, but maybe here on my Falcon trade, I can try to recover a little bit from my earlier short. So even though losing trades are no fun, a lot of times they will point you in the right direction, right? If the market's not wanting to go lower and you've incurred a loss to the short side, then very often that gives you the ability to pick up a trade going the other direction and perhaps even have a little bit more confidence in it. All right, so I'm going to go now with the ATR stop. Because it seems to be following the market pretty well. Oh, come on now, don't look too far back. Obviously, you could have tried to run this trade out on the Raptor as well. Okay, well, so far so good. Rode out that first little trend line touch. Obviously, we need to get above this little swing high here at 66.05. Try to encourage a few more buyers to come in. I wonder if I should try to run this out even further still, you know that? The market's trying to get some legs here. You know, my profit target up here would definitely be a little bit of a home run, but where are we after that? Ooh, all the way up here to 66.45, which I think was, oh yeah, that was yesterday, within yesterday's range. We were trading up around 66.50. All right, well, here we don't, it's a relatively quiet day. I'm going to swing for the fences here. So either my ATR stop or my really great big home run. Ah, all right, well, they looked back just a little bit too much. Maybe a little bit too ambitious for a day like today, but pretty much offset the earlier loss. All right, well, what do we got now? We're just kind of bopping around a little bit. Okay, lots of resistance here now near the highs of the morning. So it looks like 66, well, let's call it 66.10. Ooh, a good breakout there. What was I doing that I missed that? Well, now they're on their way to to my profit target. Doggone it. Well, that was a nice little run up right to the median line. That was the first target for this move here for that number one signal. And now the next one all the way up here to 66.40. Well, we can call it 45. It's only a tick off. Yeah, thanks, Phil. Phil says the ISM report out at 10 o'clock this morning. I have a feeling they may be positioning themselves already for it. David's looking at a head and shoulders. Okay. Oh, I see. Maybe you're looking at an upside down head and shoulders type thing. The head and shoulders is like the test of the extreme that I keep talking about. Whether you call it a head and shoulders, whether you call it an M and W, whether you call it a 1, 2, 3, the idea is always the same. You're looking at a market that is losing its momentum and possibly changing direction. We've definitely, the bulls have turned on the jets here a little bit. And I would welcome a hard edge bounce, actually. That would make for a decent opportunity to get in. A nice little macro pullback here on the hawk, and now we're also getting another late filter entry here on the falcon. It hasn't printed just yet. You could just look to set up to enter above the highs here. I probably would not crowd the trade too much. Ooh, I might even give it that much, just so that I could get by with a tighter stop. And now that late filter entry signal is spoiled because the trend line changing color. And it looks like we're going to get that little bit of a pullback attempt. And maybe even that number 3 signal. And there's the number 3 signal. Now it looks like we got a little bit of added volatility coming into the market. So once again, I'll set up the trade, but I'm not going to crowd it. I'm going to give it a couple of ticks here. Maybe risk it to the hard edge. The danger when the market is moving as sideways as it seems to be this morning is that very often you'll just see it break like a resistance area by a tick or two and then reverse on itself. So that's what I'm trying to avoid here by staggering my entry by a couple of ticks. All right, well, here come the buyers back toward the high. And we'll see now whether or not they can push on through. So you see they broke the high or met the high. I don't know if they actually broke it. No, it looks like they met the high. But this is what I mean. It's very characteristic of a market that is drifting just to break the high by a tick or two and then reverse on itself, try to fool traders into getting on the wrong side of the trade. And that's what I'm trying to avoid. Well, are the sellers going to knock him down off the highs again? Yeah, so far. So now we're getting another reverse signal, number 2, off of the highs. This is worth trying if you're open to counter trend opportunities. You can see we've hit the highs 1, 2, 3 times. Well, there's a pretty good chance they're going to try to test the bottom end. I'm not saying we're going to get a full-blown reversal, but our target, which would be $100 or 20 ticks in the NASDAQ, should be reachable. All right, I can close that up for now. They're waffling. Waffles. That sounds like a good idea. Had a light dinner last night and woke up hungry this morning. All right, well, a couple of things working now in favor of the sellers. I'm not totally convinced we're moving back into a seller's market. Or whether we're just going to stay sideways here. So we blew through that 6610 support. Now we're back around 6600. And if we don't pick up some support here, then we're probably just going to move back into a sideways trading range. All right, Sue, we have got a hard edge bounce now to deal with. So the eagle It looks like it's going to try to give us a red bar buy. The Falcon already trying to turn over just a little. And the Raptor, well, the Raptor's still a little conflicted. The Raptor and the Hawk, actually right now, both a little bit more on the bearish side. Here on the Hawk, we just have the macro pullback. Here on the Raptor, you could consider this signal right here your early cloud crossover to the short side. So your clouds about 3/4 of the way crossed over. You got that little bit of a pullback and you produce the signal. Technically, it is not a number one signal because the clouds are not fully crossed, but that's why we refer to it as an early number one signal. All right, the Eagle band now also crossed over, and we'll see whether we get that full-on number one signal printing now with the Raptor. Or will the market recover from 6,600? Tune in tomorrow. So here's one of these early, just for the heck of it, with trend signals. Here on the Eagle as well, we now have a red bar buy. So if you're looking at this market and you think, oh, this market is bullish, I'm just looking for buy signals, the band isn't that much out of sync here that you could not get on board that buy signal, or use the second push entry and you could enter on the next push higher. That is a very doable trade. Given the current state of the market, I don't know if I would go in too heavy. Here on the Hawk as well, we have the same thing going on. We have now a green bar sell. That is a signal that we can buy the failure of. You can either take it with trend or you can do it counter trend. And you can try to go in for a little scalp, or if you want, you can, looks like I can take multiple contracts on this one. So you can try to run it out a little bit. Or you can simply use it as an early warning that perhaps this downtrend is ending. It's time to bring up your stops. We should get a first micro macro cross if, in fact, this green bar sell fails. Phil says the ISM report was negative. Well, Phil, if there's one thing I've learned over the years is that the markets tend to rally on bearish reports and they tend to fall on bullish reports. So I don't necessarily put a whole lot of stock in what the talking heads say about a report. It's just the way it is. The report itself means nothing. Market perception of the report means everything. So if the market is expecting a bearish report, which it probably was, if the report is more bearish than the market expected, the market will fall. If the report is not as bearish as the market expected, the market will rally. So that's why you got to always be a little careful when you're trading reports. It's all about market perception. Oh, I got some serious slip on that. So I'm just going to roll those up a little bit. Okay. And it looks like I can maybe go into a parabolic mode soon. Give me one more swing. Come on. All right. So I'll go now with the parabolics because this is the Hawk micro scalper. It tends to move a little bit faster, and I don't necessarily want to try to ride out too many swings here. See if we can't get back to the high this morning, which is right up here near the 66.20 line. That's where they stalled before. Maybe I will hold my stops just for the moment. Technically, this now the first micro macro cross signal. That is a little unusual. Normally what will happen is on the failure, I better enable this stop again. Here we go. Normally what will happen is on the failure of the green bar sell, the first micro macro cross will develop a few ticks higher. Nope, okay. Well, that was a good little move. Thought maybe I would get lucky enough to ride out two swings, but didn't happen that way. So 66.20 still a little bit of an obstacle. And if it wasn't for my first little stink bomb trade, I would be having a very good day today. Oh well. Like I said, the stink bomb trade did have the added benefit of showing me which way not to trade, and that is valuable in and of itself. Well, the resistance is really sticky here. I'm just watching now to see how much of a pushback the sellers are offering here. So far, they're trying. It's not a lot of momentum, but look at the Geiger counter, how the Geiger counter was just pulled hard over. You got a lot of sell orders creeping through. Remains to be seen whether the buyers absorb all those. The Hawk now, the Falcon, both a little bit more bearish. We did get a counter trend signal here on the Raptors, so the Raptors leaning that way also, it seems. The big trend still looks up to me. So I'm a little reluctant to get too crazy on the short side. Rather, I would welcome like something like this number 3 signal on the Raptor. And, you know, given the way the market is, the way it's trading sideways and stuff, yes, the hash mark is down here, but it is okay to give the market some room if you're just not sure how it's going to react to these highs. And like I said, I do recognize that I'm giving up, well, pretty much my entire profit objective, even before I gain entry. But I'm doing my best not to get stuck on the wrong side of the market here today. That's the bigger challenge for me. All right, there we go. So where's the next target again? Shall we swing for the fences? Oh, okay, why not? David is asking, hold on a second here, David. I'm going to force this trade to break even because I'm not liking the early hesitation. Okay, David's asking, sometimes I see you trade one contract, sometimes I see you trade 2 or 3. How do you do that? Well, David, I let the trade manager position my or determine my positions relative to my risk. So you see here on the risk amount, I have my risk set at 2%. Excuse me, I should get a stop strategy in play here. There we go. All right, so I have my risk set at 2%. Let's say I take a look at this signal right here. This isn't a Oh, let's do a real signal so I don't confuse people. Okay, so here now is a trend change signal on the Falcon. My risk is set at 2%. That means Trade Manager is going to restrict my risk exposure to 2% regardless of where I place my stop. So notice what happens if I place my stop right there at the low. I have $450 at risk, and Trade Manager says, okay, you can afford to trade 7 contracts because that's 2% of my capital. 455 is approximately 2% of my capital. What happens if I place my stop a little further away? Let's say I go by this swing low. All right, a little bit of a rounding error. Let me try this again so I can get it a little bit more precise. There we go. Trade Manager says, okay, we'll keep the risk still at 2%, which is about $450, $460. But now, given where my stops are, I can only afford to trade 4 contracts. If I place my stops further still, note the risk amount does not change, but the risk exposure, or the position size changes. The risk exposure remains constant, relatively speaking, but the number of contracts changed. So I went from 7 to 4 to 2, and I could even go further still. You know, if I throw my stop, oh, it looks like it can stretch it even more. If I throw my stop way down here, you know, I can still have a $400 stop, but I'm only trading 1 contract. So what changes? Well, obviously the position size changes. The potential profit changes, right? Because now I'm only earning $100 versus $700 when I had 7 contracts going. But the other thing that changes is the probability that the trade will work out. What is the probability that this trade will work out versus the trade where my stop loss was right here working out? Well, intuitively, it should make sense to you that the one with the bigger stop, with the one with more room, has the greater probability of success because you're giving the market that much more wiggle room, right? So this is something that a lot of traders never really get a handle on. They're so afraid to lose money that they jam their stops in ultra tight, and then they end up getting stopped out prematurely only to watch the market go on without them. Now, to be fair, the DTS tools are very efficient at picking up immediate market momentum. As you can see in this case, you would have done just as well throwing your stop below the low as leaving your stop way down here. And incidentally, you would have earned 7 times as much money. But for me personally, I can't do that all the time. I like to have the probabilities in my favor. I hate getting stopped out early only to watch the market rally on without me. And like I said, the DTS tools, they're great at picking up immediate momentum. You'll see almost every signal. You know, if we look here now at another trend change signal, here was an early trend change signal. Here was the official trend change signal. Like, the market really doesn't look back very far. Here's a trend line touch signal. Again, it just goes up right after it produces the signal. So the other side of that coin is people will say to me, oh yes, well, Eric, I would never trade all those contracts. I would just do my trade like this. And this way, if I'm wrong, I would lose only $65 and I have the chance, and they usually quote a 2-to-1 or 3-to-1 reward to risk ratio. And they would say, well, I'll make at least 120 or $180 on the trade. Okay, on paper, that sounds very good. And on paper, it works flawlessly. Usually what people will do is they'll say, okay, we'll take 10 trades, 5 will be winners, 5 will be losers. And of course, if you're earning at least 2 or 3 times on all your winning trades, you will obviously offset all your losing trades, right? It makes perfect sense on paper. What's the problem with that scenario? The problem with that scenario is no one, and I do mean no one, I don't care if you're Warren Buffett, Paul Tudor Jones, Ed Sequoia, any of the famous traders that you can name in the world, no one knows where the market is going next. So you are basing your entire trading decision on something you don't know, namely the profit side. How many times, and if you're honest with yourself, it'll be lots. How many times have you set up a really good looking 3-to-1 risk reward type trade only to have the market fill you and then tank and go the other way? Or at least low enough to stop you out. Or if you're left with leaving yourself a reasonable stop, so you're down here, well, now all of a sudden you need to have your reward way up here, right? To make the trade work. Even that's not far enough. You got to go higher still. There's your 3-to-1 risk reward type trade. Okay, so the market goes up. How likely is it that it's going to go up all the way to your profit objective? Well, okay, it's going to make a liar out of me again. But a lot of times what happens is the market goes up a little ways, comes down, stops you out. Because your probabilities are all wrong. Right? You're basing your trade on the part of the trading equation you do not know. The only part of the trading equation that you know or have any control over whatsoever is the risk side of the trading equation. And you'll have to forgive me for getting a little bit on my soapbox about this. It's just that I see so many struggling traders pulling their hair out, wondering why they can't make any money trading when they're doing this kind of stuff all the time. And this is not how you trade. This is how you trade in a textbook. It makes perfect sense in a textbook. Professional traders do not trade that way. Professional traders do risk reward, and I'll show you that in a moment, but they do it in hindsight. They don't do it at the beginning of the trade like the amateurs do. And yet, anything you read about trading, especially on the internet, is always telling you, oh, you need to have at least a 3-to-1 or 2-to-1 reward to risk ratio. Yeah, great. I'm sure you can show me a lot of examples in hindsight how that worked out real well for you. But I challenge you to show me that real time. And I bet you dollars to donuts, it's not going to work out like your 50-50 example did when you did your piece of paper and you had 5 winning trades and 5 losing trades. If you do it in real life and you are in a sideways market as we are right now, you may have 3 winners and 7 losers. Well, you better hope you get your 3-to-1 because you're going to need it to break even. If you're just getting 2-to-1, you're going to finish in the red. So, you know, it's a game of probabilities, and it's always a balancing act. But if you're going to risk a certain percentage of your trading capital, I would encourage you to at least leave yourself a reasonable stop. I mean, if it's going to cost you $400, whether your stop is down here or whether your stop is right here, you may as well give yourself a better chance. Give yourself a little bit more probability. So if the market does if the market does go up and decides to take a little look back before it continues higher, at least you don't get tagged right here. A good trading friend of mine, Tom Loge, always used to love the tight stops. And I mean, Tom ran tight stops. He would run like a $30 or $50 stop. And he would routinely get stopped out. The market would go up, it would tag him, bring him in, tag him out. And he would get tagged anywhere from 5 to 10 times a day. And I said to him, Tom, why don't you just, it's going to cost you $300, $350 on the day. Why don't you just leave a $300 stop? Why don't you just leave one stop? One $300 stop, and at least give the trade a chance. Like, you're making your broker rich. 10 trades, that's 10 commissions, 10 fees, but that was not how Tom was wired. Even though to me it made perfect sense, it made no sense to him. And Tom made money trading because when he hit, okay, the market would go up and he would make back his losses and then some. But to my way of thinking, you know, that's not right. I would rather do one trade, have one $300 stop, and so the market goes up and looks back. Somewhere during this look back, there will be at least one more hesitation. At that point, I can do something with my stops, right? If I'm anxious about the trade, I can bring my stops right there. If I'm less anxious about the trade, I can bring my stop right here. Even if the market reverses at this point and takes me out, all right, I may have had an initial stop loss of $300. I ended up losing $150. Well, if this represents 2% of my capital, a $150 loss would be a 1% loss of my capital. You will not blow up your trading account by losing 1% of your trading capital. You will blow up your trading account if you routinely end up losing 8, 9, 10% of your trading capital. That's when you're going to get yourself into trouble. But if you manage your risk, you limit the number of times you enter the market, and you try to maximize your earning potential by using correct position sizing, you will make money trading. Those are the cornerstones to a successful trading career. And yet nobody, and I do mean nobody, talks about money management. I frequented trading forums, I talk about money management, and right away the conversation goes back around to, hey Eric, what are your favorite settings for slow stochastics? Hey Eric, what moving averages do you like? Yeah, what's your best setting for Bollinger Bands? And on it goes. No wonder traders can't make any money. But yeah, David, that's what was going on there. Sorry about my little rant there. But the trade manager, it will automatically control your risk exposure. The trade manager is the #1 reason for not using Ninja 8. It is a very worthwhile trading tool. David's thinking it may look like a good move lower if it breaks down here. Yeah, it's possible. You know, I'm still, I can see a retracement for sure, and you're correct. The moves higher seem to be struggling, right? We're getting more peaks, not quite as much follow through. Did break an intermediate swing low right here. I'm curious how we're doing here relative to the trend line. Oh, look at that. Getting back to the trend line, a little trend line bounce maybe. All right, so now we've got the red bar buy here on the Eagle, and this, oh, doggone it, it's slipping right past me. I look away for a second. This tends to be a pretty reliable signal, and especially off the trend line, that might be worth trying. Looks like we're going to get a chance at a second push entry here, which would be helpful. A little bit later than I would have liked, but here, first micro macro cross on the Hawk, trend change signal in the works on the Falcon, and we were working a possible cloud crossover signal here on the Raptor, but honestly, I'm looking at the Raptor and everything is starting to twist up here. David, David, you give me the impression that you are very much a counter trend type trader. David's asking you, what do we think? Is there a top formation? You know, I was the same way, and this is years ago when, oh, I don't even remember the name of the forum. And I was doing the same thing. Everybody was posting their trading opinions about particular markets, and there was a fellow in the trading room who said, "Nope, the market's still above the trend line, so I'm buying." And I was selling, and he was right. And I thought, yeah, okay, well, that was just a fluke. So the next retrace, I was selling, and he says, "No, the market's still above the trend line. I'm buying." And he was right. And this went on, and it was not a fluke. It was like 5 or 6 trades. Okay, you can't accuse me of being a quick learner. It was 5 or 6 trades before I finally started to clue in that, hey, maybe I should be paying more attention to this whole trend thing. Now, granted, when the trend is in transition, it can be very difficult to tell. But if there is anything whatsoever resembling a trend on your chart, you should stay with the trend as much as possible. Yeah, see, David says, I love counter trend moves, but I'm learning. Counter trend moves are great because they're exciting when they work. They tend to be very fast and they tend to be very profitable. But you know how I was talking about probabilities just a little while ago. The trade-off for a counter trend move is the lower probability that the trade is going to work out. So you're trading a definite stop, like you know, if you're trading counter trend, stops need to go above the highs here. If you get above the highs, well, you're definitely on the wrong side of the trade. But in exchange for that smaller stop in a counter trend move, you're giving up the probability that the trade will be successful. So counter trend moves, like I said, I'm as guilty as anyone. They are very alluring, to be sure. And I'm getting ready here for a much more aggressive stop on my trade, just in case this does turn out to be a test of the extreme. Come on. Come on. Just stuck at 66.30. All right, here. I don't like to influence the market this way, but I'm going to have to force it up with my mouse. And I'm running the bar high low now. A very aggressive stop strategy. And with the eagle, you know, we got a few more dollars at risk because of the larger tick size. So I'm just going to jam the stops in here tight, and I'll take whatever they give me. Let's see if they stay above 66.30. Are they going to try to run out? We're still within yesterday's trading range, by the way. 66.40 was the top end of the trading range, which finished off yesterday's session. Come on. Just a little higher. Oh, no, not ready for the breakout yet. Okay. But like I said, it's the eagle. The brick size is a little bit larger. I'll just take the profit. It's easier that way. And now it seems like they're slumping back into the trading range. And now we have actually, speaking of reversals, a triple top. That really could put a strain on the buyers. After all my preaching about staying on the right side, or on the trend side. In a very loose fashion, you could even interpret this as a rule of three here on the eagle. We already have a first micro macro cross lower here on the hawk. If you wanted to get in early, stops really should go above the highs. All right, so they're pulling away a little bit from that first micro macro cross. I wouldn't go chasing it, I don't think. Like I said, we've still got a trend to deal with here, so you can't count the buyers out entirely. And now that the market's actually moving a little bit away, I'm gonna reduce my there we go. So I have just it all in a running position now. So my first micro macro cross also turned into a macro pullback and also now into a 4-arrow consolidation. Because I'm going to try to run this out a little bit, I'm going to bring my break even a little bit further. And I better get ready with a stop strategy as well. A little bit of a flinch as we get down there. This low right here, fairly influential support zone. That's where the buyers showed up the last time. So if we get through there this time, there might be a little bit more follow through. And in fact, I'll go with the more aggressive parabolic again. Okay, a couple of questions here from Phil. First, Phil's asking, explain the micro macro cross on the hawk. Absolutely, Phil. We'll start with that one because that's the easy one. And then I'll get to Phil's second question. Okay, so the first micro macro cross on your hawk micro scalper, this is one of your high probability signals that we look for. And if you don't already have the hawk cheat sheet, you can get it at the members area. And if you can't find it there, you can always email me and I will send it along to you. This is what that looks like. So these are the 5 high probability signals that we look for on the hawk. The Raptor, we actually went one step further and we actually programmed the signal prompts to help you identify the high probability signals. But the first micro macro cross, it's really quite simple. It's when your micro line, that's the thin one, crosses the macro line, and it's the first signal where everything is in sync. So you've got red trend lines, you have red bars, you have a red filter, and you have a red signal. That is your first micro macro crossover. Very high probability signal. Here was another one to the upside. Micro line crosses the macro line. Everything is green. We have green bars, green trend lines, green filter, and a green signal. Here's another one to the short side. Here's one to the long side, which unfortunately did not work out. This is rare, by the way, but this is why I also mentioned you need to trade in context. You know, if you're looking at your chart and you're getting a lot of yellow bars clustering and everything's going sideways, well, you should recognize that you're in a sideways market. So that's your first micro macro cross signal. Phil also asked, what happens when the candles explode up like a minute ago with the indicator warehouse 8 Renko bars? Well, they would explode higher regardless of the chart style that you're using. What's happening is what is usually referred to as trapped traders. Traders who are stuck on the wrong side of a trading position and they have to get out. They have to get out because their stop losses are getting hit, is what's going on. So, yeah, I guess this was a pretty decent move here. So we have an obvious sideways trading range. Oop, wrong tool. Should be a fairly obvious sideways trading range, right? We know in trading ranges that around the bottom quarter or third is where the buyers hang out, and the top quarter or third is where the sellers are. If you are a buyer and you are buying whenever the market gets down toward the bottom third or bottom quarter of this market, where are your stop loss orders? Well, there's a really good chance your stop loss orders are only a few ticks below the lows. And if you're a seller, where are your stop loss orders? Well, there's a very good chance your stop loss orders are only a few ticks above the highs. So when the market finally breaks down and gets beyond the trading range, what happens? Well, all these stop loss orders get hit. Well, if you're a buyer, your stop loss order is a sell order. So you're adding fuel to the fire, if you will. You're adding a lot more sell orders to the market, and what happens is it goes down really quick. You'll see the same thing happen to the upside. It is a good thing to try to learn how to spot trapped traders. And it's not difficult to see because they become entrenched in these trading ranges. We saw it happen, I think it was the hawk trade that we did earlier, where the market made a quick little move up. I think it was this move right here. It just went boom, 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 boom. Well, what happened? Well, what happened was we had, okay, let's roll this back a little bit so we can pretend it's going on real time. We had active selling going on here. We had a lot of sellers thinking 66.24 was a good number to sell, because what they were doing is they were looking back in their charts and they were saying, oh, look at all that resistance back at 66.24. The market can't possibly go above 66.24. So what happens? They start selling, and see all these peaks, they start selling. Well, where do they put their stop loss orders? Well, they put their stop loss orders just a couple of ticks above this zone. Right? That's where their stop loss orders are. So what happens when the market resumes the trend is they say, uh-oh, we're on the wrong side of this trade. The market's actually not establishing a trading range or going back down toward the lows. And their stop loss orders, which are buy orders now, add fuel to the fire, and boom, the market just boom, 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 like that. And you see, it isn't until some of these candles here, the ones with the tails on them, where we see anything resembling a recovery, where the buyers actually, or pardon me, where the sellers actually try to get back into the market. And this happens all the time. You look at any time the market explodes. If you look back, I guarantee you will find an area of congestion. Sometimes it will even be like a little bit of a wedge, where there's active selling, active selling, active selling, active selling. Oops, we're on the wrong side of the market, and they got to get out, and the market explodes. Now, the same thing could have happened to the short side. If the market did in fact turn and start heading lower, somewhere around here, there would have been more buying as buyers defend their position, because the bulls and the bears obviously have different opinions about the market. So the buyers come in and they start to rally up the market, and if they're right, well, the trend will resume. And if they're wrong, the market will reverse, and it will probably reverse in a big way because, of course, these guys, everybody that bought down here, that's where their stop loss orders are. And they're going to find themselves on the wrong side of the market. Prices will probably drift down here, and then there will be another attempted recovery on the part of the buyers. And this happens time and again. If you take the time and go through your charts, like I said, just look at any area where there's been a very rapid expansion in price. I guarantee you can go back and you can find instances, evidence where there was sustained buying that ended up failing. And then the market went the other way. Likewise here, right? Here is obviously, again, this is why trend, I think, is so important. Obvious uptrend. Well, you didn't convince everybody. Somebody thought it was a good idea to sell there. Somebody thought selling there and here and here and here. And what happens when they're wrong? Boom, they got to go. And the market makes a big rally higher. Here too, right? And you can do this all day long. So when you see a market struggling, or when there's obvious selling against a trend or buying against a downtrend, look for those opportunities to catch those traders who are stuck on the wrong side of the trading equation. And you can get yourself into some very, very fast moving markets, which is always preferable to being stuck in a slow moving market. Now, sometimes you'll fool yourself. Sometimes the market will, you think you've got it figured out. You think you've got it pegged, and you buy in right here. This isn't a buy signal, by the way, but I'm just showing you the market. You buy in thinking, okay, the market, I've trapped traders on the wrong side of the trade. The market's going to go up, and it just keeps going sideways. Now you become one of these traders that are trapped, because where is your stop loss order? Oh, well, it's probably right down here. And what's going to happen if the market heads below here? Well, it's going to engage all those stop loss orders from other traders like you, and it will just fuel the market lower. That's why I said I don't normally do reversals, but this morning, where I had a very good reason to try to sell. In fact, I think this was where I tried to sell, somewhere around here. And the market would not go lower, it would not go lower, it would not go lower. I recognized, okay, I'm on the wrong side of the trade. I may as well look to buy. So I took the next buy signal after I got stopped out, because I knew the traders that were selling, like myself, were wrong. We were wrong. It's okay to be wrong, because that gives you an opportunity to be right. And so I bought in and was able to take advantage of the move going the other way. I know it takes a little bit to wrap your head around. You can ask me as often as you need to, but that is the essence of trading. That is the pulse of the market, if you will. And it does that time and again. It just keeps going back and forth, checking the support, checking the resistance. You can see after a very nice rally this morning, look at where we are. We're back near 6,600. So I think it's going to be a sideways kind of day, folks. We were bullish. Now we're full on bears again. And that's, like I say, the life cycle of the market. We are getting into the lunch hour, though. And the market's probably going to get a little bit quiet for the next little bit. I would, well, right now, the buyers are, or pardon me, the sellers are in control. So I would look for a little bit of a bullish pushback and maybe an opportunity to short it. But overall, I think we can expect more of a sideways type of trading day. All right, gang, I will talk to you tomorrow. Have yourselves a great day. See you then. Bye for now.